Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, 29th day of September, 2016, and this is the Daily Report for Gold and Silver. After falling fairly strong for the last couple of days, it does appear as though precious metals have found a potential bottom, trading slightly lower in spot, slightly higher in COMEX. First to spot, 1320.87, with a high today of 1325.83 and a low of 1316 and change. As I said, net change on it puts it off about 25 cents on the day. Now, when we look at spots at 1324.20, putting it up about a half a dollar on the day. High today is 1329 and the low 1316. As far as silver goes, silver is trading nominally higher, up about 3 cents at 19.15. That, of course, is when we look at the futures, the COMEX futures. And then lastly, when we look at the spot market, just like in gold, down fractionally. But the key is that I do believe that we are seeing the first signs that we have hit some sort of a tentative bottom after really rising following the FOMC announcement that interest rates would remain the same. If you remember, that market ran up about $22 and then stayed really to the top range of the market with no decline but no advance either. And then over the last 2 days, the preceding 2 days, of course, we have seen this market come down considerably. Traders, there is absolutely no doubt, but over the last couple of months, gold is traded in a defined and narrow range. Top of the market roughly at about 1380, and really critical support at around 1300. We'll put that in here. So we've only seen this market trade in a range of approximately $80. And during that range, we have seen a series of bottoms in the market at roughly 1305, 1308 in that area, including this last blip that moved the market back up. But we have also seen a series of highs that have been moving down. So we have had a series of lower highs, and that bodes well for the potential of this market coming under pressure. Now, I believe that this market is consolidating at these new highs rather than this being a potential top in the market. And to show you that, I've really got to take a look at a longer term chart. We'll do that in a second, but that's a weekly chart. And I do believe that we're still in a bullish move, but we have definitely moved sideways for a period. In fact, let's go ahead and pull that up. And traders, this is the chart that I was talking about. It's a weekly chart, and I draw your attention to the moving average that I have placed in here. Now, this is a simple moving average. It is set at 28 weeks, 28 cycles based upon the close, but 28 cycles. And it's been a really strong indicator, I believe, if we look at historical moves in the market of when this market's in bullish mode. You can clearly see its trades above this particular moving average. When it is really in a flux, meaning that it's trading in this range where it had this extreme high and now it's trading to a new low, then back to a high and a low like this, what we find is that the moving average line at 28 cycles pretty much stays in the center of that price range. Obviously, when the market comes down, you can see that it is trading well below the moving average. It attempted at this point to move above it. It couldn't. We had a couple of blips, this of course going into 2014. So it only traded above these moving averages for a short period of time here and here. And then as the market came down, one more time right in here, but that for the predominant part of this market coming down, it had been trading under the 28-week moving average. Now, the reason I bring that to your attention is we used this moving average, if you recall, at the beginning of the year, and this was our real breakout moment, the fact that it broke above that. Now, the question that we raised at that point is whether or not we're seeing something similar to what we saw as this market came down, because realize at this point, people were talking about $800 gold, $700 gold. And so the fact that it moved back up, to me, was a very, very strong indication. But the strongest of the indications, or the confirming factor, I should say, was these trend lines that we put in from the tops of the market here. It came in from this top and this top, also from these lows here. And so when we broke above the 28-week moving average as well as this trend line, we knew that we had a breakout, and that's where we made a ton of money. We've made money all the way through. We've had profits of about in excess of 300%. But the key is right now is, as you can see, we are still absolutely trading above this particular moving average. But at the same time, we've stalled. We are moving sideways. But notice that even with that sideways action, we are trading well above that moving average. And that's why I believe that we are still in a bullish phase. Although we're dealing with some consolidation here, we're dealing with, as I said, on our daily chart, a series of lower highs, which is disconcerting. The flat bottom is absolutely giving us some support. But I think that overall that this market is simply forming a base. It's consolidating at this area. And as long as it holds 1,300, I feel very strong that we're going to see that move to about 1437 short term. Now, the caveat to that is we have to remain above this particular price point. Now, I do believe that we've seen our first signs of potential bottom in the market, and our next trade, I'm looking for a position point to buy this market. We know that we've been safe buying it around $13. We also know that selling it has to come in a little bit earlier than we've been doing because we're not getting any kind of real follow through. Didn't get it here, didn't get it here, and did not get it here. And that was the first sign because we had this double top here. So we've got 1, 2, 3. We've got a triple bottom in play and a series of descending tops. But my sense is, as I said, on a long-term basis, that we are still absolutely in a bullish phase. Now, just as I believe that we're in a bullish phase in gold, I also believe that we're in a bullish phase in silver. That being said, we talked about this fact that we really have a narrowing of range. Like gold, we have a series of lower highs. But unlike gold, we have a series of higher lows, and that's because silver's been really the shining star of the precious metals complex over the last couple of months. But you can also see that we are definitely within a range again. So just like gold, we're in that range. What I do want to see with silver, because they can move a little bit differently, is if this lower level support line holds. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.